Welcome back. Well, let's focus on a lot of stocks then. And we have Deven Choksey who joins us on the show. Hi, Deven. Good morning. Hope you're having a good morning. Well, it appears we're going to pull back a little bit to kickstart trade because of the overnight jitters. But that won't, will be more stock-specific market, so to call it. Now, overnight, we have news that DAC has approved 10 capital acquisition proposals worth around 1.4 lakh crore. This piece of news will clearly boost up some of those defense names, though they were up yesterday as well. What's your preference on the back?
Hi, Nigel. Good morning. Well, I think this is more or less in continuation with, the entire program that the government has announced already. And the amount of money allocation which has happened, I think it is already known through the budget. So from a particular perspective of, seeing any particular company getting benefited out of it, not completely sure at this point of time, though the known names are pretty much known and present in the marketplace. Only concern that one would have that I think all the positives, everything is definitely seen long-term positives. The roadmap and the runway looks absolutely clear. In the present circumstances, the valuations are fully factoring everything into it. Maybe I think some of the private sector companies which are part of the ecosystem in the defense space, they could be probably some of the beneficiaries, and they may include the companies which are in EMS space, in the manufacturing and in R&D. They may include companies in companies like solar industry, where probably I think they have got the higher amount of focus also on the drone segment of the business now. So such kind of companies could possibly play a slightly bigger role going forward as we see the higher amount of money getting allocated for the purpose. So to greater extent, I believe that it's a long-term play. Normally market get little excited in the short term with the news, but otherwise I think it's more of a long-term play for most of the investment stocks.
Deven, just to follow up on that, good morning to you. Within the defense space, what would your preference be? For instance, a lot of the shipbuilder stocks, they have been going through the roof, and we spoke with Garden Reach just before the announcements came as well, and they were really looking forward to a lot of these orders. But again, shipbuilders versus a stock like HAL versus something like BEL, BEML, where do you still see some sort of valuation comfort, along with, of course, the growth potential?
Well, good morning, sir. Good potential remains, I think, equally there in each of the space that we have talked about in respective range of the products, I think, category that they cater to, including HL, which looks, I think, brilliantly positioned, no doubt about it. Within the shipbuilders, the prices have corrected to a certain extent, but I think they still hover around 40 times to 60 times price earning ratio, even on a trail basis. Even if you discount it, I think on a future earning prospect basis, they are not completely inexpensive at this point of time, but I think slightly moderated on the valuation. So yes, I agree that I think some correction in the price is a good opportunity to buy into these stocks, given the kind of visibility that they have. More importantly, one would ask a question to most of this management: what is going to be the run rate for execution? I think the order book is clear, the visibility is clear. The execution part, I think, is something which one will have to look at. If they continue to grow at 15 to 20% rate of growth, and on the other side, the market gives 60 times price earning ratio, quite possible that there is going to be some amount of rationalization on the valuation. That is what my take would be. Otherwise, I think the respective companies which you mentioned, within that HL, VEL, both looks interesting. Even VEML to a greater extent looks interesting from the current perspective.
Okay, all right, got that. Deven, since we're discussing stocks in news, AU Small Finance Bank, I mean, it's very clear they have aspirations and ambition to become a full-scale bank now. Your thoughts on the stock?
Yeah, I think, there is nothing wrong with the kind of expectations that one would have from these companies to become universal bank, full finance company, etc. In my viewpoint, I think two things are going to be driving the growth in businesses for most of the companies. On one side, you will have to have significantly large amount of book, I think, which could probably be used for competitive pricing in the marketplace. And at the same time, the digital infrastructure, the fintech infrastructure that you require to have, so that I think on one side you process the loan faster and at the same time distribute it, I think, equally faster. So that is going to be the demand from any player who is entering into this space. And last but not the least, I think the one who has got higher amount of customer access points. And that's where probably I feel that some of the larger NBFC companies or some of the larger banks we've created a situation of accessing the customer points, I think, much better. They would be relatively better off compared to the smaller ones. And I would rather like to put my money behind the ones which are basically showing the larger amount of market growth side. Because fintech would necessarily mean that they would be having, if on one side they have customer, on the other side, I think if they have the platform for technology, I think the processing of the loan will be faster. That is what I think we are all asking for the growth rate. The growth rate would probably be much better in likes of Bajaj Finance, likes of Geo, likes of ICICI. I think they are remaining relatively more stronger proposition.
All right, Deven, on days like this, people look to buy some quality names when you have a bit of a roller coaster ride. And paints is a sector that I was just highlighting earlier this morning. If you look at the Nifty, it's done very well in the last 1 year. The sector that's not participated is the paint industry, because you had a new competitor that's coming in there. They couldn't push through price increases as well. But now it seems that valuations are a little more reasonable because of the underperformance in the last 1 year. And you have crude oil prices that have come down, which serves at an input cost, which will be good news for them. How do you approach some of these names? Asian Paints is still down 2-3% in the last 1 year. Berger Paints has well not given any returns. So in the last 6 months, these stocks have tried to make a comeback. I think they're up 6 to 10% odd.
Yeah, spot on, Nigel. I think on one side you have the lower raw material price, the input cost, I think because of the crude oil. All the crude oil derivative prices are going to be remaining lower going forward as well. And that gives the margin comfort, which is what I think likes of Asian Paint would have maximum benefit out of because they are an integrated player at the same time. On the other side, I think the market is growing. So the checkpoints, the distribution points, I think is going to play a major role. Again, I think Asian Paint is, I think, very favorably placed. The new generation of the new companies which have come up in the paint business, they certainly have a long way to go as far as I think their ability to reach out to the end customer is concerned. And as a result of which, I think the volume pickup in their business, I think will probably be taking some time. So in my viewpoint, I think if one is looking at the steady rate of return and given the kind of model that Asian Paint is pursuing, I would think the home decor model that they are pursuing, I would think that I think they would be relatively better choice to buy into. Maybe not high expectation on the appreciation side, but around 15% kind of an appreciation distinctly possible if one is holding it for 12 to 18 months.